is concerned. Deepan Mehta of Elixir Equities is with us. Ronak Onkar is also with us, the co-fund manager, equity, head of research at PPFAS Mutual Fund. Gentlemen, good afternoon. Good to have both of you here. Thanks very much, and apologies. I think we are hitting you late. Deepan, first up, what do you make of Honasa, Mamaearth? You know, as a business, I mean, what does one do from here? And second, I think the broader, bigger lesson, right, which I think you and others have also always said, I mean, IPOs, give it a couple of quarters at least, maybe a couple of years before you start to actually, buy into these. So just your thoughts on what we've seen today, 20% down.
Yeah, Prashant, good afternoon, and thank you for having me on your show. I think that time and again, this strategy has proved to be very profitable. You just avoid the IPOs and wait for 1 or 2 years, then see how the stock is trading. You may get it at an attractive valuation. In the case of Honasa, what attracted everybody to the stock was that it was a category within the FMCG space which was underpenetrated, and here was a company which was growing exceptionally well. And you always want to have some allocation in your portfolio to an FMCG stock. And considering that all the peer group stocks like HUL, Nestle, Godrej, all of these companies are growing at low single digit, here was a stock idea which was showing very decent growth. But now I think that thesis also has been tested. I think I would just wait for 2-3 more quarters. Stock price may have a further decline to take place, and let the operation stabilize, let the company start to report higher volume and profit growth. Then one could look at it afresh, but for the time being, it's a complete avoid.
Okay, got that, Deepan. Well, let's get in Ronak Onkar as well into the conversation. He is the co-fund manager, equity and head of research at PPFAS Mutual Fund. Ronak, I've been waiting to speak to you actually. What are the cash levels? You're one of the few guys out there who had 15% plus cash levels. I think it was drifting towards 20%. Markets are down closer on 11%. That's the headline index. But stocks have corrected substantially. Have you all started deploying money now?
Good afternoon. Thanks for having me. So I think you guys predicted last month that the cash levels would go up by 5% more, and it definitely happened. We are at 20% as of October end fact sheet. But we have been deploying slowly and steadily in the stocks we already like. Something like private sector banks, a bit of IT, a bit of ITC, Power Grid, Coal India. Some of these stocks we've been adding, but nothing new in the overall scheme of things we have found, which is extremely cheap. Like you said, stocks have fallen a lot, but they have fallen from their peaks, and that doesn't necessarily mean the valuations are still reasonable. So we'll wait it out till we find good opportunities.
So the top additions that you all did, if I got that correct, was Coal India, the large private sector banks. Is that correct?
Yeah, some of the usual suspects we have been adding for the past several months.
All right, and that would include Infosys as well.
Yeah, a little bit of IT also we've added here and there.
Can you explain your, fascination with ITC this time around? Because yes, obviously in the consumer space, it is a value bet. But if you look at some of their metrics, volume growth has been lacking. Say the other peer, Godfrey Phillips, by a while over the last 7-8 quarters. FMCG business is hitting a bit of an air pocket right now. And hotels, everyone says that maybe the cycle is on the way up, somewhere closer to the top. So at these levels, why would you buy ITC more and more?
So interestingly, the metrics that we were looking at when we started buying ITC were the FMCG business and the profitability contribution to the overall P&L. That has been improving over a period of time. So some of the trends that we were expecting that the company will deliver, they have been delivering. On the other hand, the capital allocation is now more clear to make sure that cyclicality of the hotels business is also in their favor. Some of these things have worked in their favor, but that does not mean necessarily valuations have become very, very expensive. So even within the consumer space, I think for the growth that they deliver, the valuations are still reasonable. And that's the reason we have added a little bit over our existing position.
What about the capital market plays, Ronak? The last few conversations I've had, you are saying that you're lightening positions. I'm just looking at the sheet that I have with me, and it appears you'll have lightened positions even more. And even I think ICRA is something, after a while I'm seeing that you'll have lightened positions out there. Tell us more about this. You think the best has played out for this capital market related plays?
I think we have had too sharp upturn in terms of volumes in the market and profitability for the companies, and cyclicality bears the fact that this gravity will definitely pull the volumes and volume growth down over a period of time. So we don't want to catch the falling knife. So whenever we see valuations becoming too unattractive or too much out of favor, we start trimming. And we've been trimming these from that point of view.
Since we're talking specifics, Ronak, Reliance, any thoughts? And the other one I wanted to ask is Indigo. We had the Indigo new CEO with us at our event on Thursday. They're talking about doubling the business over the next couple of years. Just your thoughts on these two?
We don't own these stocks, so don't want to comment about individual companies we don't own. But interesting companies, we always track them.
Okay. Deepan, same question to you. Reliance and Indigo?
Yeah, first to disclose that we are invested in Indigo and very positive on that business. I think attractively valued given its position in the industry. And there have been certain short-term challenges in terms of a lot of planes being grounded, and that has increased the cost of operation. But I think that should gradually ease, and with lower oil prices and also travels, kind of holding up the traffic as such. So I think the prospects are pretty good, but you should expect a lot of volatility in the earnings as far as Indigo is concerned. And Reliance, I think we need triggers. I've said time and again how they are going to unlock the value in the retail and the Reliance Jio business. That's the key question. Is it going to become a holding company, or are they going to split the company? I think that will determine the future for Reliance Industries. And a split may easily entail a 10-15% up move, but a pure IPO with Reliance becoming a holding company means a lot more disappointment for Reliance shareholders, and this underperformance may continue for some more time as well then.
I just want to highlight two names in the solar space. Vari Energy is popped up to the high point of the day. It's up 7%, 8% now. And Premier Energies is up 12%. And by the way, they are the number 2 and number 3 largest volume-led gainers right now. Humongous volumes on both these names, with 8 and 12% gains coming through.
All right, we'll keep an eye out on that. Deepan, I'll come back to you with this question, but first to Ronak. Ronak, do you think HUL has everything priced in already when it comes to the slowdown in the consumer sector? And from here on, with the weakness that we're seeing in some of the other players like Mamaearth, etc., it's likely to get better from here on? I mean, we heard, again, at the Global Leadership Summit from the Global Growth Officer of Unilever, SE, and also Rohit Java, who said that, going forward, maybe the building blocks that they're putting in place would be better for Hindustan Unilever.
So again, we don't own this stock, so don't want to comment too specifically, but consumer goods companies are extremely competitive in nature. Even if you see the larger ones and even D2C brands coming up, and the ease of access to market now in terms of having the entire platforms ready to just launch your product, I think some of these things will definitely be challenging unless the existing brands, the incumbent brands, also use these techniques to reach out to the younger audiences over a period of time. So I think it's a long-term question where we have been tracking these companies for a long time. We love the cash flow profile, but haven't been buying them because the valuations have always been so unattractive and unreasonable for us. So we thought only 1 or 2 plays in consumer made sense to us. That's why we own only one ITC.
I don't know about Prashant and Nigel, but I've been reading a lot about hyaluronic acid, niacinamide, and peptide, and all those, ingredient-based products, which HUL is also coming by. They've admitted that they missed the naturals wave, but they don't want to miss out on this active ingredients base right now. So their beauty and personal care, they've, also segregated the segments. It's beauty and wellness and home and personal care right now. So with active focus on that, it will be very interesting to see if this category, which is growing extremely fast, grows faster for
By the way, all those names sound like a chemistry class. And that was...
all you have to do is go into the dressing room of maybe your wife or your daughter. You will find all these names at the rack. There are sunscreens which have SPFs, peptides, etc., moisturizers which have hyaluronic acid.
Mangalam said you go into the dressing room and he stopped.
I
was thinking Prashant is in the spot. But anyway, let's get on to the metal stocks. But before we do that, Ronak, you all have played a couple of these special situations. Namely NMDC, if I remember correctly, you all had played it very, very early on. You all played NMDC Steel, NMDC Limited. And I'm looking, as per your last disclosure, I think you'll have completely exited NMDC Limited as well. It's been a very, very good run for y'all in this special situation. Any other special situation that we should be looking at that you all are currently playing?
Nothing at the scale at which NMDC was there, and it was an interesting opportunity. And the whole idea behind playing these cyclicals this way is that your downside risks are limited, but the upside is unknown. So we took the chance when NMDC got demerged. But yeah, you will see it in the fact sheet if any new situations come up and we participate in them.
All right, Ronak, thanks a lot for joining in and giving us your take on how you'll are placed. And thanks a lot, Dipan, as well, for joining in today. For the time being, we're slipping.
For more news and updates, all you need to do is follow CNBC TV 18 on all of our digital platforms.